So in today's video, we're going to be talking about what are the different types of streams of income, like what they are, what they mean, and helping you to better understand what each of them are. Okay, so the first thing is, let's go over number one is active stream of income or earn income. This one is the one that, and this is probably this may be your first time even hearing it being referred to this, but this is essentially your job, right? So, and this is the most common one that everybody has, and usually most people or many people have only this. So, active income is where you earn money where you earn money through a job, through wages and salary. The reason why it's called active income, right, is because you have to actively be doing something in order to get a return in money, right? So, meaning that if you don't go to work, you don't get paid, right? If you go to work, you do your job, you get paid. So with this type of income, you have to actually go to work in order to get paid, and then of course it's going to be taxed, and it's taxed differently than passive income or other ways of making money. And so this is the one that you're most familiar with, and that's what it's called, active income. Number two, the second one is passive income. So passive income is a type of income that you essentially do it one time and then it keeps paying you over and over again, right? So most people may not understand what that means. Depending on what the workload is, it does require, or what the project is to create the passive income, it does actually require work. So it doesn't mean that you don't just do anything and then the money comes in, but the concept is that you do a lot of work once and then you reap the benefits of it over and over again. So for example, you write a book, right? So writing a book takes time to put together, write it out, edit it, make it look nice, publish it, and then distribute it out. And then pretty much all the work you did was at the beginning, putting the book together and then making it available. Obviously, we're not including marketing though, because that's different. That's another part of it, a part of the process to get it to actually make money. But then after you make money from the sale, it could be you wrote the book a year ago, 5 years ago, 10 years ago, and you're still making money from that book. So that's why it's called passive income, because you did the work once and you're making more and more money. So it could be also as well when it comes to videos. I'm sorry, not videos. Videos like YouTube videos, right? Where you did the work one time, create a video, and then once your channel is monetized, you make an income down the line. It could be courses. You create a course one time, right? And then once you are able to figure out how to market it, then you keep, every time you make a sale, you make money over and over again. So that's essentially what passive income means. Passive income is something where you do the work up front and then you earn money from it later on. It could also be royalties as well, when you produce like a song. Passive income can also be characterized as like stocks, bonds, if you own real estate, because essentially you could, invest into building a house once and then rent it out, and then you're making money over and over again. So if you could, the more profitable the idea is, or the more lucrative it is, the more passive income you could earn in the long run. And passive income, honestly, is what you should aim to have in addition to all your other sources of income if you don't want to work forever. Then you have what you call interest income. So interest income is where you make money on the interest of something. So, and depending on what form you go through, it may not be a lot. So for example, unless you put a lot of money up front, if you have a CD account, right? If you own like treasuries and bonds, the money that you get on the interest is considered your interest income, right? And if you do it correctly, right, you can also it can be significant, right? So CDs, um, deposit accounts, savings accounts, but we know a lot of savings accounts don't really make you a lot of money, right? And then you have capital gains income. So capital gains income is where you make money off off of stocks. So stocks, bonds, and I want to say this also falls into crypto as well. So this is where, because of the nature of what the sources of making the money, it's capital gains. So specifically, your stocks, your bonds, anything that you make a profit from the sale of the asset over time. So profits from your stocks. So if you buy, let's say you buy stocks at $2 a share, right? You get like 100 of them, right? And so you do that in 1 year. Then maybe 3 years later, the stocks are now $16 per share, right? And now you still have 100 of them, and then you sell that. The profit that you make, that is considered capital gains, and you're taxed on the capital gains as well, right? So that's an example of capital gains income as well. Then the last one you have is rental income. So rental income is where you invest in properties and people. So essentially, you own a property, right? And then you have people rent the property out, like an apartment building. That's a really common example. A house, and people rent it out, and then they pay you, and so you charge a higher cost than the mortgage, and they are essentially paying the cost of the mortgage, and then you are profiting the profit difference. And so you can make a substantial income doing that. And that's how a lot of people have lots of properties and they make a lot of money doing things through rental income, right? So, and the great thing about rental income is that it can, like I said, pay you over and over again as long as you have somebody who is living in the house or living in the properties and they pay their rent on time. Then you have dividend income. So dividend income is different than capital gains income. So in addition to, like, if you sell a stock, which is capital gains, dividend income is that depending on the company, every quarter or every year, a company will share its proceeds or its profits with its shareholders, and then it will give you a portion of that money back, which is what they call dividends. So if you invest a certain amount of money into the right stocks, and you hold on to those stocks, you can also make money from the dividends as well. And so it's not only just stocks where you can get dividends. You can also get dividends from whole life insurance policies, certain types of life insurance policies that are considered participating insurance policies, which means that you are considered a shareholder of that policy too. Then you will also get the dividends as well. So this is another really lucrative way to make money if you put enough money in it. So if you, for example, if you buy a stock and you don't invest a lot of money in that stock, you're only going to get back pennies in dividend. But if you invest a good amount of money into the stock, into the insurance policy, whatever that looks like, you can actually reap a lot of money in the long term from dividends. Another way to reap the benefits of like investing. And then we have profit income, right? So profit income is now where you own like a business, you sell a service, you sell e-commerce, drop shipping, like you have an e-commerce store. These are all the options, and you make profits from whatever you sell. So for example, if you have, and this is why you have to charge the right prices, this is why you have to not only charge your worth, but you have to also charge, you have to do the math so that way you take into factor everything, so you actually do have a profit and it is sustainable. So for example, if your product costs, if it costs you $20, right, to put it together and make it, etc. But then you charge the customer $40, then you make $20 profit for every product that's sold. That's an example of what I mean, right? So that's profit, right? And so companies, businesses, they either do this in high volume, right, where they're able to sell a lot of them and make $20 profit and make a huge amount of money, or they do a mixture where they have higher price products and they have like a very high profit per product. So did you know, for example, I want to say even like Louis Vuitton bags, the ones that a lot of people spend $1,200, $2,000 on, there's some of those bags that honestly it only costs them to about $200 to make the product, right? So you imagine like what a huge return on profit. But here's the thing, because of their branding, because of how long they've been around, and don't quote me on the exact numbers, but because of how long they've been around, that's why people buy the products, because the quality, the name, and etc. So branding is important. It's the reason why people go to Starbucks and spend $5 on one coffee when they could go to 7-Eleven and spend the same coffee for $1, right? So essentially, it's the branding that does make that difference. So that's profit income, where after you pay the expenses, whatever you keep left over, you should also factor in whatever the cost is, the tax that you're going to have to pay to the government too. Then the last one is, so that's another thing that's important when it comes to your profit income. Last one is royalty income. Royalty income is, like I mentioned a little bit earlier, it falls under passive income. And this is specific to like music, books, movies, any type of copyrighted material, and then you get a percentage of the sale every single month, year, quarter, whatever. So for example, Mariah Carey, you know the song that we all love, many of us love, All I Want for Christmas Is You? Well, she made that song in like, I don't even know, I think 1990 something, like the late 90s, maybe early 2000, and she's made over $60 million from that one song. Why? Because the song is timeless. So every time it's streamed, especially during the holidays, she must love Christmas. All I gotta say is she must love Christmas. Every time Christmas comes around, that song becomes popular and it becomes streamed. It's played in the malls, everywhere, radio, TV, commercials. She makes money every single time. So that's the thing that she did once years ago. That still has made her millions today, right? So when you're creating products, that's another thing too. The products will do better as far as passive income over time is if you create products that are timeless, right? So that will still work a year, 20 years from now. So there you have it. Those are all the different streams of income. I also wrote them all out in the article below. So if you want to click below, you can read them in more detail in the article below. And I also included a little visual diagram for you. I hope you found this informative. If you learned something, click below, let me know, write below, comment below. Let me know what you learned, what you took away from the video. Make sure you hit the subscribe, follow, and watch button, and I'll see you in the next video.